Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Friday, October 26, 2018. Um, Not a lot of new items to report, but just want to do an update for members of the site. As far as today, I think today has the potential to be a very important day for the market. We may end up closing without any clues, but I suspect how we close today um, will it may give us some good clues to what might happen next week. So you guys all know if you're, unless you're new to the site, and then please just catch up on some of the recent analysis, some of the videos or other commentary. But yeah, I'm still looking for, move down here and SPY down to about this, to retest these lows. And as I've said before, if that happens, one of two things will happen. We'll either reverse just shy or undercut those. And, if we start heading down that way, I think we'll probably undercut them. I think we'll get a waterfall sell-off, more margin liquidation. I have my targets for the official QQQ trade set a little bit above that, but I just want to point that out too, that you can, if you're in this trend and you've been short, and I know it's been tough with all the counter trend rallies intraday and all that, but you can trail one of two options. I mean, these are the targets. These are levels I think a reaction's likely if and when. Oh, shoot, I just moved that line. If and when we get there, either way, the target remains the same. The support levels, my targets are always set just above actual support levels on shorts, just to prevent, sometimes you have the buyers step in early and reverse it. And so just like on longs, I'll set my sell targets just below the actual resistance level. So those are the levels. You can either cover there where a reaction is likely if we get there, but again, it all depends on how the charts look. I can you look at a daily chart and identify targets out in advance, areas that are likely to produce a reaction, but if and when we get there, I need to zero down on the intraday charts, 60-minute, 15-minute charts, and some other things, and look at individual components. And that's what I just wanted to do with this video, is take a look at some of the top components of the market. Um, so far, so good. We gapped down today. I'm going to go over some of the leading stocks to watch. And as far as how to trade this, again, I get this question put a lot. We've had a lot of shorting ops, but as you get down here and you're very oversold, and you still have some potential divergences and things like that on the bullish divergences, I should say, on the 60-minute chart, extreme oversold conditions, it gets less and less favorable to short because you can get caught in a sharp snapback rally. So um, here's, and it also, again, it depends on your trading style and time horizon. I'm going to give you an example here. So member LeBlue asked in the trading room, thanks Randy, I'm planning on trading NQ. If you see any levels, can you give me those levels? And so I did. I put up a chart here. So we were heading up, and I said, it's labeled a little different. I said in the trading room, 68.90 would be where this opening rip could reverse. So I throw on a short there. I have a swing short in NQ, and I added on a short there right around 68.90, just a little bit below. And what I'll do, and you can do this as well if you do plan to short. Now you have to be an active trader. You just trail it down and let it run. If you got a good entry, if they get you, they stop you out. So I have a stop a little bit above that reaction high, and I'll trail it down at this point. But that's what I'm looking at, and that's one way if we do get that waterfall sell-off. Remember, I've talked about a WTF moment, and we have the potential to have that today. Meaning, what's going on. I'm trying to put my head in the head of the majority of market participants, which are bullish. I talk about that a lot. Shorts make up a very small fraction of the market as far as shares held and trading volume and all that. A majority of market participants, especially during a bull market, are bullish and long. So therefore, you have to, say, what are the masses thinking right now? So for those that have like Pavlov's dogs have been rewarded for buying the dips and buying every pullback on Apple and Amazon and all those. When the dips stop being bought back, especially down to a certain point, that's where you collectively the masses realize, hey, something's going on here. This is not working anymore. I bought here, I bought here, I bought here. I'm referring to the way down. Let's just look at some of those stocks, and we'll look at what I'm talking about here. So here's Apple, world's largest company, publicly traded company, that is, the largest stock in the S&P 500, the largest in QQQ, NASDAQ 100, and it's flirting with both this trend line, this bearish rising wedge, the yellow lines, and that 216, call it down to about 215 because it keeps piercing down below. 216.41 was a support, and it keeps testing, tapping on the bottom of that. So They don't report until next Thursday after the close. That's a long time. So if the rest of the market can't hold up, Apple's going to break down. I'll tell you that right now. If Amazon can't hold hold the support levels I'm about to show you in a second, and some of these other stocks, Apple will break down, and I see about another 9% downside to my first target on Apple here. Will it drop 9% in front of earnings? Normally not. Normally a stock will go into somewhat of a holding pattern before earnings, and but if there's a meltdown type sell-off, a rush for the exits, unwinding a margin and all that, it'll get dragged down. So it is possible. That's all I'm trying to say. Uh, had to pause the video there for a second, so I forget where I was. But let's just look at levels here. Here's Microsoft long-term trend line, this white trend line. We broke it yesterday intraday, and I want to show you how far that trend line goes back. We go back to for you. That goes all the way back to 2016. In fact, we could probably extend it closer to that reaction there. So it's a very important trend line. Again, let's go back to this daily chart here. We snapped back below it yesterday, but Microsoft was saved by earnings, and now it's testing that level again. So here's a common theme. I've talked so much, many times about these market-leading FANG stocks that account for nearly half the returns of the NASDAQ 100, Apple, Microsoft, Amazon, Alphabet, and Facebook. So there's Microsoft, dancing line. As I say, support is support until unless broken, and you get these whipsaw signals in a volatile market, and you also get them on and around earnings. So now we have earnings out of the way on Microsoft. The only one that's not out of the way of the big ones is Apple. So here's Amazon. This is a chart, and these are levels I've had for months before this stock even broke down. It was in the bearish rising wedge, broke down, back tested, flirted around my first target after being hit right there. And you can see today we kissed at the top of my T2 zone. Excuse me, guys. I'm trying to talk fast to get this out. A lot of trades to do, and I want to keep trying to answer questions as quick as I can in the trading room. For members. T2 zone is hit. That's the top. A zone is two support levels in close proximity. So you can see we've lost the 200-day moving average. Pretty bearish if we close today. So I mean, the theme is I think today how we close a day really could set the tone for next week. If the markets close down well below where we're already down now, QQQ is down, what did I say? 3.5%. If we close down much more than that, it's probably not going to look good next week technically. Anything is possible, but that would set the stage for more downside next week, and then those longer term targets that I'm looking at on the downside. So there was Amazon. And so the theme is I want to point out Apple's at support, Microsoft is at support, key support levels, and both moving averages as well as price support, trendline support. Amazon's at support, top of a support zone. Alphabet is at support. I have a level here. You can see I tune that line up, increase the color. I'll call it about 104. A lot of reactions there. And I also have some trend lines. I have different boards on these stocks. Some of those will show a trend line. But there it is on GOG. I just showed you GOGL. Facebook, not looking so hot. It still has divergences, but it's had divergences for a while. And I've talked about this. This is more of bear market type action where all these positive divergences are failing to play out. The only one I like, or I like the best out of the big FANG stocks, I call this one the FANG-E. If I add FAAMG and then the I, because Intel is the sixth largest, or it was until recently. I don't know if it still is with this correction, but this one has had divergences for a while, but these divergences continue to persist. And more importantly, Intel fell down to my target zone. I listed these targets months. I listed targets when the Intel was at the highs. I did a video, showed you this wedge, many times highlighted. We broke down, and I was calling for at least a 24% pullback. That was my first target, and that's been hit. And I expect a reaction. So far, we've had a reaction. There's been a nice bounce off that level. And Intel is now reported, and it's one of the few stocks up today that are, one of the top components. So it's already bounced from low to high about 8%. And look at a perfect tag. This is where technical analysis shines in these kind of markets like this. So there it is. Now, what does that mean? We're also below this 40-week moving average. We don't have to have a huge rally. We had a reaction already. We bounced off that level. We could certainly rally. And this is one of the better looking semis. If you grabbed it there at 42.59, my max downside target is another 10% or so. So it could break that level and drop. And that would be also, by the way, in line with my, that thrust down if things get ugly in the market. Apple, just about everything I'm looking at, if all these levels break and we have some waterfall selling next week, you're looking at give or take about 10% downside in the QQQ and as well as a lot of these top components. So that's it. I just wanted to show you they're at, a lot of them have hit support, and you can see Intel rallying off that support so far. Amazon so far today, and in pre-market, I pointed that out in the trading room last night that Amazon hit this and bounced off that level in not pre-market, but in after hours, after earnings, and it's kissed it again. But this will tell us, where are we at in this market cycle? These are levels that normally I'd be coming in with both fists buying right now. Positive divergence on the 60-minute charts, oversold down to some key support levels I have. However, the long-term charts are very bearish right now. That's what's keeping me like I say, in a bull market, you have to be suspect of bearish chart patterns. They tend to either not play out to their fullest extent, meaning their measured targets, or you get they trigger a sell signal and you get a whipsaw signal and then you're burned. And that can happen here. So we can go back and forth all day, but here's the thing. We're not going to know to the end of the day. It is still anybody's game. We have seen plenty of intraday reversals so far over the last few weeks. Big reversals. We're talking 3% plus swings in the market. And so far, look, another successful test of yesterday's big low before we had that ramp. So the markets are really trying to, QQQ is really trying to pound out support here. You can see it here and divergences, 60-minute divergences still in place. Look at that falling wedge. But this wedge has plenty of room if if we have that, if we can't hold up today and the market pukes up all these stocks, buy long start to capitulate, throw everything away, then the scenario looks something like this. Another thrust down, and we could certainly, extend these trend lines down a little more, maybe keep these divergences intact and set us up for a reversal down anywhere from another 3-5% all the way down to those 10% or plus targets. But with divergence and the markets and those key stocks at support or close enough to those long-term trend lines, if they can really ramp it hard today into the close, print this market green, we might get back on or above the 40-week moving averages on the QQQ, which is the same as a 200-day. I'll tell you right now. And keep in mind, you don't have to be, it's not black or white. So let's say if QQQ rallies, here's a 200-day right here. I'll turn it up for you. You can see this. QQQ rallies up today, it would have to rally about 3.67% to close on it. But it could close close enough to it, just like it had a close under here that week, and it didn't mean that we melted down. And this is a day, by the way. This is on the daily time frame. All that really matters is a weekly close. But if we closed right below it on the weekly, that's still close enough. I'll say this. SPY looks even worse. And I still think those levels are going to go. So to me, it's just a matter of, do we bounce now, save it for another week or two? I I don't think so. I really think we let it go here because the market likes to catch people off surprise by surprise, and this correction obviously didn't catch us by surprise. We saw the whole thing coming, and but it caught most of the market participants. And I'm still looking at a lot of metrics, put call ratios, sentiment, things like that, that show me that there's not a lot of fear in the market, and they think this is just another dip buying opportunity. And because of that, the institutions, professionals, individuals as well, retail traders, if they haven't positioned, you can't buy put protection when the market's down this much. It's too darn expensive. You can buy it, but you're going to pay dearly for it. So these are the kind of corrections that catch the market participants off guard, particularly as I've been saying, those big institutional like pension plans that have to manage their risk tolerance. They cannot afford another 10% drop on their equity portion, especially with treasuries not participating. So you guys know my current stance. I've been long and bullish, defensive issues that just because they haven't been working doesn't mean they won't. So TLT, is one of our official longs on the site. I personally have that, especially my long-term accounts. I even have some, Treasury bond futures in the trading account. As of yesterday, I started adding those on, or the day before, can't remember there. But These are levels to watch. So if we get that meltdown, and I still think that the downside is probably minimal, even if we don't. If the markets can hold this support and rally, today into the close and into next week and beyond for a few weeks, we could get another jog down in treasuries. But that's the thing about treasuries. How much you're going to look 3-4% downside maybe. I don't even see that much. So I think the risk reward is pretty attractive there. And if nothing else, it's just a way to diversify your portfolio. This trade is somewhat predicated on my bearish call for equities, but it's not exclusively predicated on that. There's a technical case to be made. So we could see a rally in stocks, and we could also see a rally in treasuries. They've disconnected the historical inverse correlation in recent years and recent months, so anything's possible there. Gold, I'll have to get to in a whole nother video. That's another one of our flight to safety assets. Gold still looks fine. GDX has been taken on the chin. And I said that. If you're new to the site, I've said it in many videos. There are many periods of times that I've seen in the market where we have very impulsive selling in the equity markets. And because gold mining stocks are just that, they are stocks. They are not gold. They're not a commodity. They're not a precious metal. They are companies with earnings, expenses, and more importantly, they trade on a stock exchange. So they're going to quite often they get swept up in the selling in the broad market where gold can outperform, and that is one of the reasons, or the only reason, or main reason that I added gold as an official trade after GDX. In the past, when I'm bullish on gold, almost always on the site officially, and what I do personally is usually trade the miners because you get more bang for your buck. If you get the call right on gold, it goes up 10%, miners will go up 20 or more. Likewise, if we're going to short gold or I'm bearish on gold, the gold drops 10, the miners will drop 20, give or take. I'm just using numbers. There's more, the miners tend to move more so in either direction than gold. But in this case, and I've seen it before, you can catch a bid as institutions and individuals buy gold for safety because it is the flight to safety asset. And again, the miners can get sold off. But as of now, the charts are still constructive there. I'm a little concerned about the US dollar and euro, but it's at long-term support, as I've mentioned. So we'll just continue to watch that. I'm going to wrap it up here. So the beginning of this video just really focused again. I was trying to give you guys some short-term levels for active traders, things to watch. And again, let's see how we close the day. If the last few weeks have taught most of us anything, it's that expect the unexpected. And that's been the trend lately of big reversals, also big drops, a lot of trend days. But sometimes you start out low and you end up big, and sometimes you start out down and you can certainly end up down. So there's no way to know how today ends, but we'll watch the charts as they develop. There's some levels for active traders on the NQ 5-minute charts. And then as always, and I mentioned this in the trading room today, the same 15-minute charts that I've been posting regularly lately. These are other levels to watch. There's really not a lot now. You could say intraday. Let me add this level and we'll wrap it up here. This is where we stop. That's comparable to that resistance level I posted this morning in the trading room on NQ, and I just showed you again on the 5-minute chart. So that would be probably an important level today for QQQ. If it can pop above there, of course, reaction highs are always important. We might have a shot to come in and actually, who knows how high we can go. You can see the resistance levels, and there's that golden trend line way up there. But it was way up there yesterday, and we hit it. So anything's possible. Now, if we don't, and this is the way I'm leaning, this market can't giddy up and rally soon. You'll see a couple things. You'll see forced margin selling. You'll see longs capitulating, stops being hit. Forced margin calls. You'll see the institutions having to cover their cover their ass, if you will, or reduce their risk exposure to those, to the equity markets, and it's all concentrated in those big names: Apple, Microsoft, Amazon, Alphabet, even Intel to a large extent. So, all right, we'll wrap it up here. I know I'm all over the place, but these are the things I'm watching, and again, to the takeaway from this video, I'll do another update at or before the close or at right after the close, and that'll kind of give us an idea as to what to expect next week. If they park it somewhere in the middle, it's still anybody's game. If we close down very red today, even more than we're down now, 2.84%. Let's say we close down 4% or more on QQQ, I would favor a sharp week down next week. If they can park it, strongly green. Somehow, if we regain this trend line today, that might call the near-term outlook into question, and we could even rally next week. So again, I'll follow up in a video later today.